The ripple effects of a plummeting iron ore price is being felt across the economy. Western Australia is bearing the brunt, but won't be receiving any special handouts from the government. Well, SBS Finance editor Ricardo Goncalves joins us now. Ricardo, developments in China are also adding to this.
That's right, Janice. China's giving its steelmakers a bit of a tax break, adding to the pressures facing global producers struggling with low iron ore prices. Now, during the resources boom, the iron ore price traded above $100 a tonne and stayed there for 3 years. But last year, iron ore slumped about 50%. And those losses accelerated in the past 2 months, down another 20%. And that will have an impact on everything from taxes to superannuation. Even by the Treasurer's admission, Western Australia has been hit with the perfect storm.
It is seeing a very significant and rapid fall in its GST appropriation.
The Commonwealth Grants Commission recommends its share of distributed GST to fall from 37 cents in the dollar to less than 30 cents.
And at the same time, it, like the Commonwealth Government, is being hit dramatically with a rapid reduction in iron ore prices.
It's those iron ore prices which, at its peak, Western Australia says supported its economy along with the rest of the country.
And we have shared the proceeds of that growth with all other states.
It's very, very clear that no agreement has been reached.
In the lead up to the mining boom, Japan was Australia's biggest iron ore customer. That quickly and dramatically changed with the rise of China, leaving Australia vulnerable to any demand changes.
China has optimally chosen to slow itself down. Its demand for steel is obviously now declining.
China's also protecting its own industry by giving Chinese producers tax breaks. But what's even more significant is the massive global supply flooding the market.
You've got too many producers and they're producing at very, very discounted rates.
Smaller pure play miners are hurting. Atlas Iron, Australia's fourth biggest ore producer, went into voluntary suspension earlier this week and is reviewing its options. It needs an iron ore price above $70 a tonne to make a decent profit margin. It's currently at $50.
The quality of their iron ore is low and they're a high cost production unit, and all of that's why, unfortunately, Atlas Iron, I think, will not be the last of this story.
The decline across the industry has seen iron ore revenues fall by $1 billion in 6 months.
3% of the population is employed in the mining sector. They'll certainly will lose some jobs out of it.
That decline concerns the Reserve Bank, which made special mention of it in its statement following its board meeting this week.
That is going to be a huge hole, not just on the trade balance side, but the revenue that the government generates through tax and royalty incomes will also be hit by that massive slump.
That could mean land and superannuation tax changes.
Well, many mum and dad investors have their superannuation invested without really knowing it in mining companies.
And a reminder to check your investment strategy. To the Australian share market now, which was impacted by negative sentiment about iron ore prices. By the close, the S&P ASX 200 fell by about 0.5%. The All Ords was down by a similar amount. BHP Billiton was the biggest drag on our market. Telstra declined. Myer rose amid talk it may slow new store growth. Qantas did well out of a weaker oil price today. Myer rising today. In Japan, the Nikkei continued to edge closer to 20,000 points. Shares on Wall Street rose only slightly as the minutes of the Fed Reserve revealed a board split over the timing of when to lift interest rates. The Australian dollar is stronger against the major global currencies, with US weekly job claims due out later tonight. And on the commodity markets, both gold and oil are down. And tomorrow, the housing sector will be in focus with building approvals and housing finance numbers out from the Bureau.